Yeah.
Except for tokens to watch out for, like avoid ones that don't make crypto economic sense. Could you expand on that?
Yeah. So for tokens that don't make sense, like for having crypto economics that doesn't make sense. So it definitely is like a case-by-case basis. So giving overarching like rules for that, I think is pretty difficult. But I would say you have to essentially think of, here's one example, right? If the price of the token goes from the 30 cents that it sells it at, and that's the usage token for the network, right? And it goes to $30, like do they have a mechanism where it doesn't actually matter that the price of the token appreciated to $30, or I guess that's 100x, like it still can cost the same to the end user who is using the network. So I'll give you a good example of this. Ethereum, right? Like this has been one of the things that like Bitcoin maximalists over the years have liked to like do like, rumors about, because like, oh, the network will get so expensive when the price of Ether goes up. And that's not really true, because the price of Ether is decoupled from the price you pay for computation on the network through the use of gas accounting. And ultimately, right, when you buy Ether, you are buying, the intrinsic value is computational steps on the network. All of the opcodes are priced in gas. So the price of Ether can go up, and the price to buy computation can stay essentially the same. It's kind of a complicated topic, because in the real world, what we've seen is that the price has gone up a bit as the price of Ether has gone up, because that is set by the miners. But with future moves into proof of stake and sharding, hopefully that won't be the case at all. And hopefully also miners will be more rational, because they're not exactly being rational right now. I could try to explain that, but that's probably better to leave it there.
Can you tell us a little bit more about proof of stake?
Yes, can I tell you about proof of stake? I can absolutely tell you about proof of stake. Where do I start? So, you just want me to start at the beginning, basically?
Sure.
Yeah. So, right now, Bitcoin uses proof of work, which solved, the Byzantine generals problem, and so that there was no double spend that was possible is a mechanism of consensus. We use proof of work. That's also what Ethereum uses right now. We use a different hash algorithm than Bitcoin. So if people sometimes want to compare like number of hash power, that's like it's comparing apples to oranges, because it's a different algorithm. But the idea is that since we're wasting all this electricity, one, that doesn't make a lot of sense, but also proof of stake will let us get into scalability solutions, so that like right now there's a limitation of like 15 transactions per second on Ethereum, which is significantly better than Bitcoin, but still not really great. So proof of stake, with that preamble, proof of stake is the idea that I'm running a virtual miner on my machine, but I have to put up a stake of Ether. And essentially, if what I say the computation should be to keep the network in consensus is different than what everybody else says, then I start losing my Ether. So we stay in consensus by basically gambling that we will have the same result on this computation as everybody else. You can look deeply into this. It's what happens to the miners? We stop wasting tons of societal resources on electricity and designing, specialized computing platforms just to keep us in consensus. Like they go away, essentially. There will be no more mining, there will be stakers, which essentially looks like a bond because mining is a little more like buying equity. You are like gambling on, price of electricity and price of the special computational device that you buy, and where the price of Ether will be in the future. Staking is basically you're getting a standard return on the Ether that you stake.
So what's the return? You get a return on, if you put up a certain amount of Ether and you're right, and you're in compliance with it, then you get a certain percentage of it. You get that back plus some fee. Exactly,
yeah. So you'll get it's looking like it'll be something like a bond. I've suggested to Vitalik, and I think there's some thought about how they're going to do it exactly. Like, given that the risk-free rate changes, you probably are going to have to long-term have some sort of mechanism to change the interest it's essentially interest that's getting paid out. But since only some portion of Ether can be staked, you can give the stakers like an 8% return. These final numbers are not set in stone by any means, but this is roughly what they're thinking. You can give them like an 8% return and yet only have 1 or 2% inflation on the network, and maybe even 0, and maybe even negative inflation once you factor in transaction fees.
I never understood why the miners would agree to run that new software that cuts them out of the game.
Why will miners agree to run the new software that cuts them out? They won't. I mean, it'll probably be like Ethereum Classic. They'll want to keep that old chain alive, and I would say that like the miners have already essentially, like the mining maximalist, there's other coins that you can mine with proof of work right now, right? And they're essentially going to have to switch to one of those. And the profitability is not massively different right now on some of those things anyway, so I'm not super worried about it. I mean, ultimately what gives Ether its value is that the network, people want the computational power on the network, and people aren't going to want the computational power on the old network. They're going to want the computational power on the new network because proof of stake, if they get it right, is going to be way better than a proof of work based system. Yeah.
If someone chooses to be...
Yeah, what are the dangers if you're staking to getting slashed is the term they use, losing your Ether. So one thing is, if you're going to stake your Ether, you want to make sure you invest in good internet. Like you might even, I'm just spitballing here, because like I said, they haven't released final numbers, but it might be worth it for you to actually have a backup internet connection, right? Because one of the things you would want to make sure that you do is always have internet, right? So that you are always in consensus with the network. Beyond that, I mean, they're going to design the software, and they're going to test it extensively, and they're even going to do a hybrid of proof of work and proof of stake for a little while, to make sure that it works, to test the economic incentives. But beyond that, aside from losing your internet, it's essentially downloading the wrong software or getting hacked, right? So I mean, I think they have some plans to mitigate this, but theoretically, if somebody hacked your machine, they might run the wrong software on it, and so you would be slowly getting bled to death on the value of your Ether. So in that case, you would want to pay attention to make sure that you are in consensus with the main chain. Yeah.
What are your thoughts on basic attention token?
What are your thoughts on the basic attention token? So again, I'm not giving you financial advice. They just raised their token sale cap from, I want to say it was 15 million to 24 million USD in Ether. I mean, I'm favorable. I think it's a great project. I mean, Brendan Ike has done it multiple times, like taking a browser from 0 to 1. Brave is great. I use it myself. It's a fantastic browser. I think the white paper is a pretty compelling read. It's a complicated network. So there's publishers and advertisers and the users, but they have some incredible technical solutions to the ad market as it is today, which is unbelievably broken. And as somebody that does run ads on the internet, like, I knew it was broken, but I didn't know it was that crazy broken. So, users, I mean, if they can get adoption of their token, really, like, users can get their privacy back. They can use zero-knowledge proof so that publishers will know, like, your interest, but not know anything about you. And so they'll be able to serve you relevant ads. And they will cut out, like, currently in ad markets, like, it's something like of the money that's spent in ad markets on the internet, like, half of it is taken by middlemen that really serve no purpose, and everybody's upset with the middlemen. So one thing I didn't say on what you should look for in token sales, but trustless means, like, being able to cut out middlemen, and advertising on the internet looks like a middleman that nobody likes, that doesn't do their job very well. So you can see why publishers and advertisers and users would like it. But of course, that is complicated because it's a three-sided market there. So those are my thoughts. I don't know if that was super well organized, but yeah.
If there's an ICO coming up that we would want to invest in, what's the best way to ensure that you actually get tokens because the sales happen so quickly?
That's a sort of a hard question. I would say My Ether wallet does a great job of Taylor and Kosala are amazing. They provide a client-side solution so that they never see your private key, but yet they'll run the node for you so that you can, like, participate in token sales. They've got some great tutorials. So I would say look at My Ether wallet. Obviously, never send from your exchange address. That will lose you your value. Yeah, there's other ways as well, and we could talk about them afterwards, I guess. But I would say, as a general rule, like, go to My Ether wallet and figure out how to do it from there, unless you're going to run your own node.
You just said don't ever send from your exchange wallet.
Right. Yeah. So if you're ever participating in a token sale and you're sending your Ether or something else from the exchange, yeah, if you send from your exchange, those tokens will go back to that address, and you'll probably never see them. Like, most exchanges are not set up to receive those tokens for you. You need to use a separate address that you control, that the exchange does not control, in order to receive your tokens and be able to sell them on. Honestly, if you participate in a token sale and you go to their website, pretty much every token sale makes a very big point out of, do not send from an exchange. Like 1997 JavaScript, like, flashing at you style, like, do not send from an exchange. So, a question over there?
Just practically, you talked a lot about how it might be used for fundraising. And I'm sort of new to it, so I'm trying to understand, how does the money actually flow out to cover costs and from the people who are working for the company and other things related to the business today for the companies that are raising money?
Yeah, so how do founders use Ether to fund their project, essentially? So it actually depends. Most of them sell to large investors in chunks to hedge out, but then, like, keep some portion because Ether keeps going up, so they want to have exposure to that. It's a complicated question because, right, like people have seen Ether go up, so they don't want to sell at today's price when they think it'll be higher in the future. But you know, personally, I think that's one thing that I look for is, do they mention that in their white paper and in their token sale marketing? Like what they're going to do with the Ether. Are they going to sell it all? Are they going to sell part of it? Are they going to sell none of it? Like actually Digix they raised, it was 6 million USD in Ether, and it was like a year and a half ago now, and they have not spent any of it. So that Ether is now something worth like 60 million or something, I don't know. They've just kept funding it themselves, so depends. Does that answer your question? Sorta?
Sort of, but then it's sort of, I mean, if you're not using it in their example, then it's more of an excuse to create value than it is the money they need to fund the company. Value for themselves,
Well,
either, but they're not actually using that capital to grow the business. There's no actual capital flowing out.
the capital flows out.
But they're not selling it, it's not flowing out.
Well, they're just holding it for the future, right? I mean, they could convert to dollars or euros or Bitcoin, but they choose to hold, you know, for expenses a year out rather than selling right now.
Is there any liquidity risk, like the inability to sell, or is it just because of the way the trading?
There's no
issue.
Yeah, I mean, I don't know what was sold today in like crypto markets, like for Ether, but it was probably, I mean, the market cap is $17 billion, so I want to say it was like $500 million was exchanged on exchanges. So actually, I mean, even like sometimes you can even just sell on an exchange, and you don't have to go find a big investor now. So like Ethereum Foundation, when they sold some of their Ether a while back, like they sold to a billionaire, like at market price, because he wanted to buy, like instead of crashing the exchange value.
Just a quick comment on some of the smaller coins that are being issued. You know, the market caps are you know, still relatively small compared to Ethereum and Bitcoin, and so if they sell to use it for capital, they move the market against themselves. So there's a bit of an inherent sort of built-in protection that it's not liquid in that sense, right? It's like if you sell a chunk of it, you can actually, you know, dump the price. So there is some protection there, at least from a marketplace standpoint.
Yeah, that's the other thing is people often keep their own tokens, and then that even also serves like some chunk, like 20%, and they will, you know, sell that in the future because they believe in their project and they don't want to sell it all right now.
Until eventually they have no stake in the company.
So your question is essentially like does the funding model of like selling 80% of your coins up front work for everybody, essentially, right? I mean, like, and like, because it wouldn't have worked for Uber, right? It wouldn't have made any sense for them to have sold 80% up front, because then they probably would have had to, they would have been very dependent on the price of that token appreciating. I say like we will see token sale structures evolve more towards venture capital structures, and one of those things I think is that, you know, because this crypto sort of comes out of Bitcoin, there's a large contingent of people that are like super hawkish on you must declare your max number of coins right now, and like that is like the only thing we care about. There's a huge chunk of the community that thinks that. I don't think that is going to hold in the long term. Like I think that eventually you will see, you know, projects go out that don't promise a maximum number of tokens. They'll say like it'll be managed by a DAO or something like that, where the token holders get to vote on further issuance in order to try to scale. And I actually think even like, so a project like Status, which is really cool, and which supports my newsletter, they will have scaling issues where, and I don't think they want to be dependent on the price of their token appreciating. So I believe they will end up exploring, to some degree, something slightly different.
That makes sense. I think to offer up another possibility is like they could also charge like an explicit ETH fee for use, like Gollum or something. Like if you're using Gollum, like maybe you get a subscription on top of paying like your GNT tokens for use of their service, just to get like cash flow to come through.
there are definitely some models out there that are actually not treating it like a, we're issuing 100,000 tokens. It's basically, some of them are treating a token as the pre-purchase of a service or product to get in the future that you can trade it in for, for a service or, whatever that platform is offering. So they continue to issue tokens, right? You mentioned earlier, so what does the underlying white paper say, and what's the model? And that's part of some of the models actually inherently, involve continuously selling tokens as like a revenue stream.
Yeah, and I would say that that's actually really important, that your token actually has usage value, because if you want to stay out of jail, that's pretty important. Like breaking the Howey test, I say in front of a lawyer, breaking the Howey test is pretty important.
Are those kind of ideas and thoughts about how to handle a token, are they things that people traditionally would have thought about stocks in a company? Or is this all experimentation and we're all trying to figure out a brand new thing, or is this a similar thing to what happened before?
Yeah, so are we figuring this all out as we go, or is it like the stock market? Yeah, I would say like both. I mean, there's definitely similarities, probably more to like venture capital deals than say the stock market, but there's a ton of similarities and things that are the same, and then there's a ton of things that like are happening and we're like as a community feeling our way towards. And I would say one of the big ones is like token sell structures, like we were talking about earlier. Like, do you sell 80% of your tokens up front and then hope that the token appreciates so that you are able to continue funding yourself? Like, that works for some people. I don't think that works for everybody. Saw somebody back there, I thought. No? Yeah?
Trading tokens at all, or just kind of buying and holding?
Yes.
Good answer.
Yeah. I mean, I think everybody's individual. I mean, this is already a very risky space, right? Of course, a lot of people have made money if they were in it, right? Especially over the last couple weeks. But you got to figure out your own tolerance for risk and whether you want to hold or whether you want to scalp things and take profits or what. So, unless I raise a fund, I am going to stay out of the giving, even what I really do myself.
So let me just make a quote from the CEO of Zappo just the other night at Coin Center dinner. He said, "You can be a fool for two reasons. You can be a fool for investing your entire life savings in cryptocurrency, and you can also be a fool for not owning any." So the point being, don't spend everything on it, but if you're interested in it, you should own some, because someday it'll be worth a lot more than it is now. That's not my advice, that's just a quote from the CEO who's done very well in this space.
One of these slides, you excluded people, XRP. What made you, or do you not think cryptocurrency? Curious.
Yeah, I don't really want to get into that too much. I mean, I'm not trying to be a hater on Ripple. I think it's an interesting project. I just don't personally consider it to like be part of our space. I'd say it's like similar, but not. It's an interbank transfer protocol, essentially. So, yeah.
Do they not use blockchain?
Yeah, I'm not an expert on Ripple, so I don't want to try to get too deep into it. Anybody else? Going once? Yeah.
Are there any kind of really far out projects that you think are interesting, even though they may be a little bit too ambitious, or trying to solve something that's in the way? Crazy.
Yeah, they all are. No, I mean, since you mentioned, I haven't really looked into it that much, but Urbit is like one of those things that it's pretty far out there, and it's an interesting idea. Urbit, U-R-B-I-T, and I'm not even going to try to describe it. Yeah, it's like your own computing environment on a token. I don't know. Yeah, that's pretty far out there. That's the project I can think of that is like I don't think it's a scam, but it's still pretty dang far out there. Yeah.
Is there anybody else that has an interesting use case? You want to say something about the healthcare space, Ed? I mean, what?
I've got a billion questions, but I think the big question I have, as far as the white papers, successful white papers, aside from the credibility of, let's say, the crypto, credibility of the founders, and what type of detail, whether technical detail or about the token, or would stands out in these white papers?
Yeah. So what stands out in white papers? Like technical detail, particularly?
Aside from that, because the ones that seem to be successful have these founders that have some crypto credibility, or they've done something, and I'm reading some of these equations and I'm saying to myself, what the heck are they talking about? Aside from that,
It's Greek to me, literally.
Yeah.
I mean, what I do is I look at the code. I'm not even a developer, but I don't know. I'm not an idiot. I can sort of figure out what's going on there.
So you expect to see code for description of the coin as part of it?
Yes, I would say yeah. I mean, personally, I do. Unfortunately, not everybody does. So like, I'm thinking of like basic attention token right now. I haven't looked at their code, honestly. Also, I've got a week still, so I probably will see what they've got out there. But it's Brendan Eich. I mean, I don't, it's a little different when it's Brendan Eich and when it's, I don't know, somebody else. He knows a lot more about JavaScript-like languages than I do, having written it. So, that's probably one where I won't get too serious about what I think about the code.
I have a question. So today you covered a lot of Ethereum,
yeah,
which is kind of an application platform infrastructure, right? But there's many other projects that are trying to compete with Ethereum. How do you see that space play out, or what's kind of your view on these different platforms also competing?
Do you want me to repeat that one, or do you think? So how do I see other chains competing with Bitcoin essentially, or with Ethereum? So I'm not an Ethereum maximalist. I'm interested in other coins and other chains. I don't necessarily know if Ethereum is going to be the chain. I mean, it is tech, and you're investing in software developers. So if they stop working on it, then maybe it gets less interesting. But so far, it's the project that I see as being the most interesting vision. There's other projects that have essentially wanted to compete with Ethereum to be the backbone for Web3, which is Gavin Wood's vision. And Gavin's vision is essentially that we have the Ethereum blockchain, and we have Whisper is sort of messaging, so for things that you can't do on the chain, like messaging-wise, and then Swarm for storage, and of course there's a bunch of other decentralized storage solutions as well. That's the one that makes the most sense to me. I could talk more about Tezos and why I don't really think it makes sense, but there's other chains that are out there, and if they can put forth a technical solution that gets developers on their platform, then that will be compelling. Many of those.
Many projects, so many chains, about interoperability between the chains. It just gets kind of confusing out there. Projects to go ahead and connect those chains and maybe possibly do. So I've seen the Rootstock stuff, and it looks very interesting to have their own chain and then potentially connect whatever, something called a two-way pay, and with other chains and be literally backwardly compatible to what looks like Bitcoin. You see any projects moving in that direction?
So Rootstock, it's definitely much more centralized than Ethereum is, and much less trustless. That's probably the kind way of saying it. But interoperability is certainly huge. Gavin Wood and Parity, they're working on Polkadot, which is going to be a solution. There's also Cosmos that had a token sale and raised like $20 million in 3 minutes or something. I don't know, 30 minutes. Yeah, it's huge. There's a lot of visions of how the future can be, right? So maybe I should actually start there. Like, the future could be where it's basically just Ethereum and everything else goes away. The future could be it's all Bitcoin. Personally, I think that's crazy, but I suppose Bitcoin could solve their scaling issues and become a platform for decentralized applications. There's futures out there where there's, thousands of independent chains, and then interoperability is particularly huge. Lately, I've personally been thinking about a lot of the private chains that corporations are running, and I think Ethereum chain itself will end up being the interoperability for all those private Ethereum chains. But the interoperability projects are certainly interesting, and definitely you can envision many versions of the future where those end up being as important as anything else in the way we build the internet. If I was smart enough to predict that with certainty, I would give you a better answer.
I have two questions. One is, what do you see as some major hurdles that we are going to jump over in the next year or two? It's kind of hard to see beyond that.
Sure.
Like in terms of when do you think regulation might play a role?
Let me answer the first one first. So the question is hurdles over the next 1 or 2 years. Yeah, the first one is proof of stake. There's a famous, in Ethereum, people say like 2 wooks because we were waiting for the Genesis block originally. It was always like, it's 2 weeks away, it's 2 weeks away. And they said that for like a year. While they had like 10 proof of concepts. Proof of stake, they've got. There's going to be a lot of testing. First, we're going to have the hard fork to Metropolis. Then, eventually, we're going to, and that might even have the seeds of proof of stake. Then we've got to get proof of stake tested and the hybrid running, and then switch to proof of stake. And then after that, it's working on scalability. So it's getting the solutions like Raiden, which is like a lightning network, like TrueBit to do sort of computations. It's also then going into sharding, which is really complicated for someone to explain. But it's basically, there's many different strands of blockchains, and it's almost like a protocol for them to talk to each other within that being one chain. I would say, there's roadmaps. I would say if we see sharding live on the network in the next 2 years, that would be impressive. So I think sharding is where they're going to move, but that's still getting there.
So what's your feel on like the regulatory environment?
Yeah. So what do I think about regulation? I've got a lot of thoughts about regulation. I'm not a lawyer. I don't talk to people at the SEC. There's been rumors of announcements at CoinDesk's conference Consensus, and yet I don't think there were really any big announcements by regulators.
Well, the SEC and the CFTC were there, and the SEC made their first sort of public statement about it, and their statement was, we're not sure whether these are securities or not. And so what they basically took the position was, we're still looking at it, we're still watching it. But at the end of the day, whether or not this is a security, whether the SEC or some regulatory body deems it a regulated security, issuers still need to treat this and investors and arm them with the proper information, right? So in other words, act responsibly, regardless of whether it's regulated or not. Make sure you're disclosing, make sure that people who are putting money in these coins know how it's working, how they get their money out, how the value changes, how you're going to use the money, just like you would in any kind of investment. So that's really the only position they've taken. That's the most recent position. That was yesterday.
Yeah, and let me add to that. I mean, this is like their first statement, but they've had like conferences and panels on this stuff. So it's been clear for some time that they knew this was going on. It's not like it happens in a bubble. It's in the New York Times, right? So on one hand, like it's admirable their level of restraint. I would say, like they have not crushed the technology, whereas they potentially, could have made it difficult for people and like capriciously put people in jail. Actually, there's probably some people that deserve to be in jail, but so like on that, like it's good that they haven't like gone after like legit people that have actually just technological minded people, because this is the Wild West, and anybody that can like figure out how to do a token sale, like they are more sophisticated than an accredited investor. The flip side to that is that you are starting to see, because there is regulatory uncertainty, projects move to Canada and move to Europe and leave the US, or they don't want to headquarter here, they don't want to incorporate here, whatever, their open source foundation, because the regulatory environment is uncertain. And like the SEC could just come in and like decide to arbitrarily put somebody in jail. So that's kind of like crushing innovation in the United States, and we are seeing the US is arguably not even in the lead, which is unprecedented, because in everything else tech in the entire history of the world, the US is here and everybody else is here, right? No offense, rest of the world, not trying to be jingoistic, but I mean, so we're at a point where like some regulatory guidance, like actual regulatory, like a safe harbor, where they would say like, look, if you put this disclosure in your thing, then like, there will be some sort of safe harbor. It's easier to say than actually implement. But that would actually, some government involvement in saying like, this is like a basic list of guidelines, and we'll try not to be idiots about putting people in jail if you follow these guidelines, that would actually be helpful.
Yeah, I mean, that's a great point. I think the challenge that the regulators are having is that they could issue a no action. They're not going to take a position, but they're going to say, they could issue a no action and say, we're not going to put you in jail. We may regulate you or fine you, but you're not going to go to jail. But the challenge is that what are they issuing that no action letter about? Right? Because the coin offerings are so all over the place.
Right.
It's very difficult just to say, we're not going to do anything. I mean, I wouldn't take that position. I don't think anybody in this room would, right? It's just, there's too much unknown right now.
Yeah, it's way easier for me to say what I say when I don't have to implement it. It's a complicated thing that is tough to get right.
No comment, right?
Yeah.
No comment.
And then the other question was, with the Metropolis hard fork, what's that process look like? Am I going to have to do something on either, hypothetically speaking, if I have to?
No. Essentially, no. You shouldn't have to do anything. It was a question about the Metropolis hard fork. Like, should you have to do anything? And the answer is no. Like the way the cryptography works is if you have your private key, which the key store file is encrypted, and so you also have your password for that private key. It'll still work on the new chain. It'll work on the old chain too, right? The question is whether, because that's how cryptography works. The question is whether, like with Ethereum Classic, somebody will decide to try to revive that old chain. And like, by the way, we've had like 6 old chains in Ethereum's history now, and only the one Ethereum Classic decided to keep alive. So questions are fun. These are good. It's a little challenging trying to figure out what I'm going to say on the fly, but I enjoy this. Anybody else?
Well, since you brought up Ethereum Classic, what's your thought on
So I'm not a maximalist. I would like to be diplomatic. They do have some projects building on Ethereum Classic. The analogy I've been using to friends privately is that Litecoin has sort of existed in a market cap in a market cap sense, it's been like a mid to high single digits of Bitcoin's market cap. So when I see Ethereum Classic at $1 billion market cap or higher like it is now, it seems a little crazy to me on first glance, just because Ethereum is a platform for decentralized software applications, and they don't have that many applications. But on the other hand, it's sort of like the Litecoin to Bitcoin. So maybe it's completely reasonable that they have a mid to single digits. And I would actually say that if they do interesting things with monetary policy, with the EVM, like there's talk that they're going to like sort of write an alternate version of the EVM. That's really interesting and it's cool, and it'll be interesting to see how that works. And experiments in the space like help all of us. So that will actually even be good for the foundation to see, like, if they do something different with the Ethereum virtual machine, the EVM, how the foundation could certainly learn from some of those things, and maybe if they work better, even implement them. So, how was that? Was that diplomatic? Anybody else? Yeah.
What are so many coins? Which coin has the highest number of transactions per second?
What has the highest number of transactions per second? I'd assume it's still Bitcoin. That differential is narrowing pretty rapidly between Bitcoin and Ethereum, although it sort of depends on what transactions you count on Ethereum.
You mean actually settling or volume?
Or potential throughput. Let's say like Visa. Visa can do like 60,000 transactions per second.
Yeah, we're talking about actually settling.
Yeah, so in order for that, so you said like Visa can do 60,000. So scalability, I took those slides out. I've had them in previous versions of this talk. It comes down to a bunch of different things. It comes down to a Lightning network like Raiden, which is a state channel. So state channels which is basically doing things off chain and then settling them back later. So you can get a lot of scalability by doing it all off chain, like transaction wise. TrueBit, so you can do a lot of the computation, like the Swarm and IPFS and MadeSafe and all of those storage SIA that you can store stuff off chain, and then proof of stake and sharding, and then we can get to a transactions per second that is big, but we're still a long ways away there. So this is still a risky space, and that's serious technological research. And if you know anything about consensus algorithms, then you should get in touch with the foundation, because they are always looking for people.
Isn't SegWit only supposed to have about 40,000 transactions per second?
Is SegWit, I don't actually know what kind of volume does SegWit do? My understanding is that there's like a SegWit 2 megabyte fork that they've agreed on. I don't know. I'm not a Bitcoin expert. So my guess is that would get them like some sort of like 2.5x for Bitcoin in terms of throughput, maximum throughput. So certainly useful for them right now, for Bitcoin right now. It's not really a long-term solution, and that's Bitcoin's problem. I mean, what is it? I mean, and people in Bitcoin can't decide. Is it a payment system, a payment network? Is it digital gold and can never, ever, ever be touched and must exist as it is now, even if that encryption gets broken in 20 years, which frankly seems to be the position of some people, like it can never be touched. That's obviously an extremist position, but there's a philosophical divide that is very tough to bridge, and I guess it's probably a big reason I'm not a Bitcoiner.
Can I answer that question?
Yeah.
So there's already proof of stake blockchains that claim that they can do 100,000 transactions per second. The graphene blockchains claim that. There are proof of stake blockchains, and then with SegWit, I think the number of transactions are limited because it's all off-chain.
Yeah, well, I think the idea with SegWit, I'm not going to try to repeat what you said, with SegWit is that it allows the Lightning Network, right? Yeah, so maybe because if they implement SegWit, then they can have more of a Lightning Network to do things off-chain. But I would still say, even with that, I mean, there's certain things you're just not going to be able to do, and it's only going to get you so much scaling. But we'll see. I mean, that's why this is a fun space. All right. I think you're going to have to ask me afterwards.